Hey, welcome back everyone to another episode of the Forex Tech Magazine. This is your host, Lewis. Hope you guys are doing well. Happy, what is this, Thursday? Yes, happy Thursday, November the 8th to you. Hope everybody's doing good. Hope you guys had a great trading day yesterday. Hope you made a ton of money and that now you got your feet kicked up. You're retired. You told your boss to go, you know, F himself or herself or whatever. And now you just want to kick back, and now you got a whole bunch of just play money that you want to just spend in old Big Willie style. If not, still welcome. Right? For those of you who have the 9 to 5 that still has this struggle and you're looking for a way out. Okay. Before we get too far into this today, I want to go ahead and put up the disclaimer real quick. The disclaimer goes a little something like this: any and all information is presented to you through Forex Tech Magazine or any of our associates, or any through our social media or just through our immediate broadcast, should be considered as educational and entertainment purposes only. Right? Say that again. Any and all information that is given to you by us should be considered for only educational and entertainment purposes only. Okay, if you're in need of financial advice, our advice to you then would be to seek the assistance of a licensed, competent advisor. Okay, good deal. So we got the disclaimer out of the way. Let's get into why you came to see us in the first place. Let's talk about the charts. The charts, trading charts. All right, so and I gotta tell you, I haven't had an opportunity to actually really go back and look at these trades, just because I've been so busy today with a whole bunch of stuff that was going on. So I'm gonna kind of be looking at these charts together with you, kind of for the first time myself. Okay, so we're gonna kind of be looking at this together, and we're gonna analyze these charts here on the fly. What we do? Let's start out with the. This is a trade that we're actually in, but let's start out with something that we're not in. Yeah, it's something that we were in. This right here is the Great Britain pound US dollar. Let's look at how this one is trading out. And I think if you remember, if you can recall when we spoke last time, we were just talking about the power of the Fibonacci's. We talked about Smart Trader and how I love the fact that all you got to do is just find a low point on the chart. After you click on your Smart Fibonacci tool up here, right, and once you click, boom, it automatically populates where your Fibonacci points are going to be at on the chart for you without you having to do a thing. And I talked about why I like that. I thought it was just really freaking awesome um, tool. And I did it. I did an example here on the US dollar, the Great Britain pound US dollar. And actually, the one from yesterday hit, right? And I'll show you where it went. So I believe this we were in the US. Yeah, we were. Let's see if it was a break. Yeah. So the one we had yesterday, of course, the take profit was up here, right? And this high point is red line for the fibs. And when we first came in, we're just kind of looking at the overall progression of this particular currency pair. And we saw where it had pulled back, we saw where it had gapped up, saw where price came back down, closed the window, right? And then we saw price immediately begin to start going back up, right? And how it hit that Fibonacci extension number, right? I was like, wow, okay, that's pretty good. Actually, when I got in, we were somewhere around about here, I believe. No, I'm sorry, I had got in here the first time. Price pulled back and hit my stop loss. So I think my stop loss was right up in here, and it pushed me out. And then when I saw price go back up again, I said, well, I got to get back in because this thing is actually adhering to these numbers. And I said, what, this is going to be a buy. And so let me get back in. So I got back in, right about the same price, and price pushed up, right, and we hit our take profit, right, and I got out. And as a matter of fact, yesterday during the actual trade, you saw me get out during the actual trade because we did hit our numbers. And so the way the Fibonacci sequence works is that you're looking for your first move, or the impulse wave is AB, right? That's why you see an A, you see a B. And then you're looking for the retractment, which is going to be your C, right? So that's the pullback. That's when the market kind of like, okay, let me take a breather from going in the direction that we were originally going into. right? And then the D is going to be the extension. That's where your take profit is going to be at. So what you're trying to do, the move you're trying to capture, is from the C to the D. You're not trying to capture the A to the B, right? Because that move is already given. That's what we're kind of basing the numbers and our projections off of, the A to the B. And then what we're trying to do is capture that C to the D. Now, the C to the D is one of the ones where people have problems with because they don't know exactly where C is at. And so because there's not a actual C is here, you don't actually see it until, or understand where C is at until later on. And I just give you an example because, well, for this particular pair right here, right, when we were just looking at, somebody might have thought the C was right here, got in, price goes up, price pull back. You know what I'm saying? It goes farther down, and then if your stop loss had a top stop loss, you would have lost money, right? The C is the lowest point of that pullback before price starts to go back up again. So when you're looking for the C, is you're looking for that low, right? And that swing low, and hopefully after that swing low, the market pivots, goes back up, and you make money off of it. But at any rate, that was a good pair to be in. Don't know that I would necessarily be in that pair right now. And the reason being is just because I know that tomorrow some economic information is coming out for the U.S. dollar. I think they get the, the rate decision? Let me just check over here real quick. It is the, FOMC rate decision. Yep. Tomorrow at 2 p.m. So, that will definitely cause some waves in the market just because if it looks like they're going to be, if there's any type of commentary that comes out or it looks like they're going to be more aggressive. And I don't think with this one right here there's going to be any type of speech or anything, which is good, right? Usually there's a speech. Usually there's a speech, there's more room for a lot more volatility in the market. But if there's no speech and it's just a statement that comes out, that's released along with the information, then we can kind of just assume that it's going to be, business as usual, even though there's no such thing really as business as usual anymore. But we'll see. Thank goodness we were able to. I mean, I don't know about your positions that you have out there in place, but my positions that I had in place wasn't negatively impacted by the U.S. elections, which is great. Thank goodness. Although they were definitely affected by the outcomes. Okay. So anyway, with this particular position right here, we're looking at a projection of about, 1.33, 117. Wow, that's almost like 201 pips. So 170 pips away. And once again, it's not to say that you should just trade this, blindly and just say, okay, I saw, it come up that, this is where I should be trading. This is what I should be on, right? Because I put my field projections in, and this is where it's showing me I should be at. That's not saying that that you just go in here and you blindly trade this, right? You need to go in and do your homework, right? When you do your homework, a big part of doing your homework is going in and just making sure the price is still doing what it's supposed to be doing, right? So this right here is the hourly chart. You come over and you look on your daily chart, and you want to make sure that once again, we don't want to buy. We don't want to buy near a high, right? And why don't we want to buy near a high? Because it's more likely to pivot. It's more likely to U-turn. You gotta be careful. You gotta be mindful of those things, right? We don't have an unlimited supply of money to be able to go out here and trade. And so that means that we got to be very mindful with the money that we do have and trade accordingly, right? Try to be as smart as we can with our money. Maybe we do one more. Let's see. I do one more. That's pretty good. That could be there. Let's see what we got. All right, boom, boom, boom. All right, so even though we know, let's see, this got high, here goes a low, here's a high, lower low, lower high, lower low, lower high, lower low. Then price begins to move sideways, kind of moving up a little bit. High, low, high, Now, originally I was looking at this and could have been considered to be a double top, right? Because you have a top here, high, high, retracement of the high, right? Now you could also maybe even look at this as being a double bottom, right? It goes low here, price comes up, doesn't retract all the way down to the low, comes back up, hits resistance, comes back down to the low. Now price is looking to expand off. Now, how will we know if price is going to actually expand off? Well, price should be able to go through this resistance that's here and go up, right? So this is on a daily chart. As of today, it hasn't broken through that resistance, right? So what we want to do, and maybe by this afternoon, once we get that information from the FOMC, it may break through this resistance. And so then ideally what we want to do is not even necessarily trade off of what may be the news of that, today. We may want to wait one more day just to get confirmation from additional candlestick showing that yes, price is going to be moving aggressively upward, and then we get in after that. Because remember, you don't have to get in right at the bottom, right? You don't have to buy right at the bottom, and you don't have to sell right at the top, right? The ideal is to be able to get in when price is making a move and go along for the ride. And if you're able to make 30%, 20%, or whatever the overall move of the price is, or the currency pair, you done good. I mean, you really done good. You did phenomenal, right? You don't have to go in there and be at the, like I said, the very top for you to sell and very bottom for you to buy. Just be in there, get some of that movement, lock in your profits, and enjoy yourself. Okay, that's what it's about. So this one right here would be something that I kind of want to stay out and watch a little bit and just kind of see where it's going to go. It's definitely interesting, right? Because price is definitely on the buy side right now. It looks like. But just because it was already going down, right? It had since April of this year, it's been going down. Looks like we're consolidating. So the next big move or the next move is coming, but we just don't know where it's going to be. So the next move is either going to do one or two things, because the market can only do what? Go three ways, right? Up, down, sideways. And because we know that, right now the market's going to do one or two things. Either A is going to continue to go up, B is going to hit this resistance and start to go down to support, or C to go sideways, right? And I think with this one right here, it's not going to just go straight sideways. I think it's going to go either up or down. And I think, I can't really say what I think. I don't know. We won't know more. We won't be clearer until maybe tomorrow. Tomorrow, afternoon, another 24 hours, we'll definitely know a little bit better have a better idea about what direction this is going to go. Okay. So let's get out of this one. Let's go over to Great Britain Pound, Aussie Dollar. So this is a trade that I'm actually in right now. All right. And if you guys remember, let's see here. Oops. All right, those lines, for whatever reason, I guess if you save stuff on here sometimes, it can get out of Wizak. Those lines are looking crazy right now. But the whole purpose of those lines was to show where price was consolidating over time. And I was trying to show you the reason why I walked into this trade. Just because price was consolidating over time. And it appeared that, get back. Price had been consolidating. And it appeared that, because once again, when we get out of consolidation, what happens? Price tends to drop. And as you see right here, this is the consolidation that I was referring to, right? Price was solid. Oh, I'm sorry, it wasn't there. It's over here. Price was consolidating, and I thought it was over here. Anyway, price was consolidating, and what happens after price consolidates? It usually drops or usually expands in whatever direction it was originally going into. About 70% of the time, right? And just based off of the original price movements that we were looking at, price was going down. So it just seemed like the smart thing to do to go ahead and to place the trade on this particular pair since it was in a downward momentum process, right? And just ride the momentum down once it come out of the once it came out of the consolidation period, right? Of course, you can see right here where we actually got into the trade. It's back on, wow, it's almost a week ago. Wow, it's been a while. Whoa, come here. Sorry, guys. Yeah, almost a week ago. Wow. And so when we first came in, price went down, but then immediately began to go back up again. Then went back down again, and then it just kind of, this is the close of that Friday. This is the Sunday. Gapped up, and it was just like, wow. And it's one of those trades like, man, what the hell did I get into, right? And as you kind of see, it's just been kind of, meandering around here over the last couple of days, and finally we're where we're at right now, which is at a lower low, new lower low. Looks like price is slowly making its way back down to our sell entry point here, which it crossed through a little bit earlier tonight, about an hour ago, right before it popped back up. So expect that it may go up a little bit more, but eventually it's going to go ahead and break back through that low, right? Put us back into the profit zone, and once we get to the profit zone, plan to go ahead and secure the bag on this one, right? And make sure we put a risk-free trade. So what we'll do is we'll bring the stop loss down, right, into the profit zone as this right here goes into the profit zone, and make sure that we have a risk-free trade on our hands for this particular pair. And if you notice, look how close we came to our stop loss, man. We came pretty zillion dollar, man. We actually did hit the stop loss, unfortunately, before we were able to secure that bag, and miss out on a whole bunch of money. So that was like 16.6 pips away from typically, because you get traders, swing traders, breakout traders, and stuff like that. They're going to place their orders around swing highs, swing lows, and stuff like that. And so sometimes, because there's so many orders in place, automatic orders in place, that it can cost your, it can cause the currency pair to spike when it gets close around to those orders, and then it can knock you out. So a lot of times, don't put my I will not put my stop loss directly on that wick, but maybe a few candlesticks, pips. I'm sorry, up from it, but definitely somewhere by it, right? Gotta have that reference points there. Take profit is, there you go, way down here at the bottom. Yeah, 174.837. I'm gonna have to come back and revisit that one. It's probably more realistically, take profit should be probably somewhere around about here, 178. Let's look at what I think what we're looking at on this one here. We're looking at a daily chart. Yeah, we just had the big numbers on there. Yeah, because when we first got in, just kind of keep in mind originally what we were looking at, right? Price was moving down at a pretty good, rate. I had this one candlestick pullback here, right? So we're still looking to get in because we just figured this right here, just the market taking a breath. And if that was the case, the next real level of support would be, down here. Although we did have some mini levels of support, in and around, that we should pay attention to, right? Because this right here actually was a support area. That's why this went. That's why it bounced off from here. So once again, maybe want to bring our support. Bring our take profit up a little bit, and then we can always look to re-enter the market after we pass that point, if that takes place, and then put our next level of take profit down here, maybe somewhere. Okay. But this is trade. I'm looking to hurry up. I'm looking to really be able to get in. The one thing that does concern me about this is that if you notice right here, we're getting a lot of consolidation. Like 1, 2, 3, 4, 5, 6 candlesticks just right here in this area, right? These are sell candlesticks, but nothing's really happening. Like there's no sell off. There's like no massive sell off. They're just selling, but they're just kind of just standing around here. And it almost looks like it's consolidating, right? Yeah, and remember what we said, consolidation. 70% of the time it's going to still move in the same direction of the original move, right? Just because it's been, negative, right? And it's still being right here in the same place. To me, that kind of lets me know that there's some buyers in the market here, and so what we may be looking at is a potential for a reversal. Excuse me. Um, Especially since we the support here. I think this is a really good level, maybe for support. So there could be a lot of buyers lurking around here that's getting ready to, just keeping this thing afloat. That I'm just waiting for that catalyst and some type of news to come out from a Great Brent Pound to push this thing up. So definitely got to be worried about this one. Okay. Um, let's see what else we got. All right, so it's the Great Brent Pound, Japanese yen. So we are close. This is the other one that we did based off of the Fibonacci retracements the other day. All right, we did two. We did the U.S. dollar, Great Brent Pound, U.S. dollar, and did the Great Brent Pound, Japanese yen. And part of the reason why it's kind of like what I told you before is that these two currency pairs typically tend to be a safe haven currencies, right? Meaning that when there's stress in the market, people are fearful about what's going on with world events. They typically put money into Japanese yen, U.S. dollar. So when there's a risk off type phase, money gets poured in there. When there's a risk on, when everybody's feeling very euphoric and just very happy, and the market overall is going to be chugging along. People tend to take money out of those currency pairs, so they can fluctuate. Definitely along with the mood of the market. Given the fact that we're going into the U.S. elections, just thought, okay, why not go ahead and go into something or look at something that's going to be um, affected by, people's emotions, right? So, yeah, excuse me. This is one of the pairs right here, right? So when we look at it, let's, first of all, first thing we notice is that we put our support and resistance lines already here on the page, and this is just from where we initially took the trade or whatnot. And if you notice, definite key areas of support, key areas of support, key areas of resistance, key area of support, key area of resistance. One of the cool things that we can look at is that price has broken through the resistance, right, and it still continues trades up. Here, price broke through resistance and it started moving sideways. Um, this is already hit, to a pretty key level of resistance, and it's not moving sideways. Still appears to have more energy in its trend for it to stay up, which is good. Because I think one of the reasons, if you notice, is that it's already moving up. It moved sideways for a little bit, broke down, and then it's, now it's kind of that second move, that second wind back up, right? But it's not starting. It didn't have to start from as low as the level as this original trend did. So right, so kind of start with a little more of an advantage than this original trend. So it still may pull back, but for right now, its takeoff was from a lot shorter playing field than this original one here was, right? And if we look on an hourly chart, we'll see, once again, like I was telling you yesterday, these Fibonacci sequences already built in, well, not built in, but it was placed on this chart. And then we can see how price had adhered to these Fibonacci sequence over time. And that's why I felt comfortable getting into this particular currency pair and putting my take profit right here at this fib, right? Which, yeah, I think we should hit. Hopefully we'll hit within this hour. If not, definitely within the next 24. We should hit this, and that'll be good for our account. Let's look at where we're at right now with this account. Okay, so this right here is the Great Britain Pound Australian dollar, negative 33 pips. So that's $245, $43, whatever drag on our account balance. As far as with this right here, the Great Britain Pound Japanese yen, we're up 124 pips, right, which is really freaking amazing. And that right there is a positive 6,550 $65.97 on our account. So that's positive. So that gives us a net total of $6,268.74 positive, on the day for our account, and hopefully that's only going to get better once we hit our goal right here, right? So folks, and once again, it kind of goes back to what I was telling you, on previous videos is that do not get discouraged by losses. I don't know if you saw the previous videos. I had like a string of losses where it's like boom, 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 boom. Like man, it's like every day turning on the computer, boom, taking a loss, stop loss hit, stop loss hit, stop loss hit, taking a loss, taking a loss, taking a loss. And fortunately for me, it's a lot of losses, right? And it started to add up. But the good thing was, the money management was where it's supposed to be at, which means that, even though I was taking losses over time, the losses that I was taking was very small, it was minimal, right? Was not going in and taking huge, massive losses on each trade, which would have definitely put me out of the game way early on, right? So the losses were small enough, and B, consistently still stay focused on the trading rules and strategies that we put in place, right? And I wasn't just willy-nilly trading. I wasn't revenge trading. I was focused and I was saying, hey, you know what? We're going to get back in here, but this is the reason why. And I break down each trade that we were going to be doing and showed you the reason why or the thought process of why I was in trade. And then we'll go back in and analyze it and say, okay, well, what could be done better? What worked, what didn't work. You know the routine. You guys been here with me since day one. And it's just that same process, that same thought process for each and every trade that we do. And thank God, but that's why we're successful. Once again, I've been doing this for over a decade. It's not rocket science. It's really not. It's just being disciplined. It's having strategy, proven strategy, be disciplined enough to be able to stick with the strategy over time, even when you feel like and you see that you're not getting the results that you want, because all it takes is one or two trades, and boom, you're back in the game again, or boom, you're killing it. Right now, with this particular trade right here, we did use a lot of leverage on this, and the reason why we use a lot of leverage on this is one, because we had a lot of ground we need to make up. Two, most importantly though, just looking at the setup just was like overwhelmingly, you know what, this is definitely the move to make, because this thing is moving, right? And just looking at the fact that we're coming off of our support line, right? B, this is also a fib level. So those two really big things that kind of helped me support to say, okay, I can come in here and put my, this is a good C, good place for me to have a C at, right? Because this is where price is going to bounce from. And price did, and the price is now on its way up. Thank goodness. Right? So remember that, we had a support level and we had a fib level, all kind of converge on the same area, which really kind of, once again, reemphasize that, hey, this is a great area for us to be trading from. And then all we did is went in, we leveraged it up, right? We knew where we had our stop loss at. I took it off here now, and I need to go back and put it back on. I don't know why it's not showing up, so I need to figure that out. Because definitely need to have our stop loss in place, so that way we're just doing all profit, just in case if something happens. I do want to put my stop loss probably right up in here, right? Just in case something happens, something negative comes out, and all of a sudden this thing just decides it wants to tank. At least we know that if it does tank, we'll tank with a profit, right? Don't want to tank with a loss, right? Don't want to give all of this back. If we have to give some of it back, that's fine. But if we give all of it back, it's going to hurt. Okay? Hopefully we don't have to give any of it back. Hopefully we take the whole bag and go home and call it a night. So yeah, look at this right, man. As we even speak, man, things went up to just like 128 pips, right? This is good money right here, right? And we are close. How close are we? We're hitting our target. Let's see. About 33 pips off. So 33 pips not bad. You know what I'm saying? So that's, once again, hopefully, either within an hour or within this next 24-hour trading period, we'll go ahead and hit that target, secure that bag, make that money, and once again, be on to our next trade, right? Whatever that may be. Anyway, I just want to share that with you. Close out of here. I don't want to be looking at that. That's a distraction. want to stay focused. Right? Because remember, it's not about how much you make; it's about how much you actually get to keep. And I haven't actually kept any of that just yet, so we don't want to be looking at that. We want to be looking at something else. What's the next one? Great Britain pound, Canadian dollar. I was saying this one too earlier this week. I can't remember which way I was trading this one though. Was I shorting this one? I think I was shorting this one actually. Yeah, I think I had a short on this one. That didn't. It didn't work out. I don't remember. Don't remember. Anyway, with this right here, let's use the fibs on this one, man. Let's look at it and see. All right, so what are we gonna do? We're gonna find a low on the chart. Bam. Yep, that's a low. Find a low in the chart, and now what we're gonna do is we're gonna look at what price is. All right, so price pulled back to that about the first fib retractment. And so now it's telling us that this right here should be our take profit. How many pips away? It's 140 pips away. Let's see what this looks like on a daily chart. All right, now here's something that's really kind of cool, because we just looked at something like this right here on the, I think, with the U.S. with the Great Britain pound U.S. dollar, right? Because remember how we were talking about price is going to do one or two things. It's either going to go on up and keep going, right? So full blown reversal, or price is going to sell off and come down. Now, but we won't really know until until after we get that confirmation candlestick. Now, if you look at this right here, price has been going down, right? It was a high, it was a low, it was a lower high, lower low, lower high, lower low, lower his high. I'm sorry for the voices, folks. It's early in the morning and I am trying to stay awake. But if you notice right here, look at this candlestick, right? This right here is like what, an indecision candlestick, right? Price goes down, we get another indecision candlestick, buyers come in, off support, pushes back up, we go through resistance, and he's like, I don't know if I want to keep going up or not, right? Okay, don't worry about it, we'll just go down, right? Price goes down, sells puts the price down, goes back down, comes close to that support again, buyers come back in, pushes back up, and now all of a sudden we get another kind of indecision type candlestick where price doesn't know whether or not it wants to go up or go down, and we see it happens again here, and based off of that, I'm going to say that price is going to probably go down. All right, we went past the resistance, right? We're back at, these highs, right? Price can't really decide. This looks like a great selling opportunity. If you sold from here, take profit could either be right back here at this level, or you could take profit going all the way back down to the previous low, which if that's the case, about 534 pips. Because just remember, price, tends to go in the previous direction, right? Once it comes out of consolidation, 70% of the time. So 70% of the time, the price is going to continue to go in the same direction it was previously. That means previously it was going down. So we should be looking for selling opportunities. We just broke through support, meaning through resistance is going up. We're getting indecision candlesticks, meaning that buyers are not sure if they want to continue to keep pushing this thing upward, which means to me that this right here is potentially a great opportunity for it to sell off and to be able to make some money on the way down. So this right here is definitely one that we might be looking at to potentially sell either today or tomorrow. We could be getting into it. And I think what I'll probably do is maybe after we get out of the other trades, look to get into it. We see right here, we're starting to move sideways. And so it could, don't get me wrong, it could go up and complete this fib, right, sequence, right? And then once it does, start that trip down, or it could just go ahead and start that trip down anyway. Once it gets past the A, this whole fib sequence is going to be negated. So it's going to be like it doesn't exist, like it was never there, because price is not going to recognize, these retractment numbers. So this is one to watch. But I would definitely say that this right here has all the really great potentials to sell. All right. So put that on your radar. Put that on your radar. Yeah. 105. Let me check something real quick, folks. Just hang tight. Okay. 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 All right. So cool. Now that we got that out of the way, that's a good one. I want to check something real quick. I just saw some numbers jump up out of nowhere. Oh wow, look at that, 130. Let's see how far. I think so. We got to be at 150 for this thing to really crunch. Let's see. Man, we're getting closer. Maybe we can see this happen. You know, before we get out of here today. That'd be freaking awesome. You know, because yesterday, man, we saw the other one hit, which is really good. I want to check something else real quick. So we got to go Great Britain pounds and one other thing, and I forgot to tell you guys this. So we've actually started the live account, right? And we got a futures trade in place right now. We're actually trading. We're shorting the. No, not shorting. We're actually going long on the Canadian dollar, right? Um, so super excited about that. What we did was start the count. It's only like, and check this out. This is the crazy thing about it. The count only has like 100 and what's it, 164, 63, something like that dollars in it. That's all it has in it, right? And so we're taking a futures position on the it's a mini micro micro position on the futures for the Great Britain pound. Not Great Britain. Gosh, I'm so sorry. I'm sleepy still. Right. On the Canadian dollar, where we're going long on it, and so that's why I'm looking over here real quick at the U.S. Canadian dollar, trying to see where it's at. Um, Definitely needs to go ahead and push down. And the reason why I kind of jumped into that trade, and we'll go over and look at it real quick. I'll just analyze it real quick for you and show what I'm looking at. Just kind of looking at where we're at. Market is definitely going down, right? Here goes a high, here goes a low, high, low, high, low. It's a little bit higher high, unfortunately. Right, same low, high, lower high, lower low, right? Market pivots off this low, right? Comes back up to hit this resistance, right? And this is kind of where we're at right now at the moment, right? So, me being the great trader that I am, world renowned, world renowned, whatever, awesome guy. When I saw that, I was like, okay, a couple things are gonna happen here. You know? Either A, can continue to push up through this resistance, all right, as it continues to make its you know trek back up, or it's going to hit this resistance and it's going to pull back down, right? We went in and we put our candlesticks assessment on. And essentially what we did when we put the bearish engulfing, what we noticed is that we start seeing a pattern that when it gets close to this resistance, start seeing these bearish candlesticks and price goes down, bearish candlesticks, price goes down, bearish candlesticks. We don't look at that right, bearish candlesticks. So bearish candlestick right there next to resistance. Every time we had a bearish candlestick next to resistance, right, price was going down, right? It's the same thing right here. That means the price should be looking to continue down, right? Now we put our stop loss and our take profit pretty close by, right? I forgot how many pips it was away. But this is something that, once again, what we're trying to do, because we've got such a small account, we're not looking to make any big swings in here, right? What we're looking to do is to try to accumulate maybe 20 to 30 pips at a time. Uh, Take that money, use it to go back into the account, build the account up, because the goal is that the more pips that we can get, the more money we can accumulate, the more leverage that we'll use in this trade over time. Right now, each pip is about $1. Right? I know you said that's incredible. How can it be $1? When you only got like $100 some in the account and you're trading the the Canadian dollar. Well, that's how futures work. A little bit different than the spot trade for forex. And what we're doing, and maybe in some couple of future videos, we'll go through and we do some future trades and show you, to break down the difference between the futures and the forex market. I mean, there's a ton of similarities in it, and there's a few differences there. There's certain reasons why I like to trade futures sometimes more so than I like to trade spot forex. Um, but once again, that's something we'll get into right for a later date, because I think it's really good information, and I think a lot of times if you don't have that as part of your arsenal, then you could definitely be missing out on a lot of potential opportunities to get in the market and trade, especially when there may be some limited, opportunities because of the amount of capital that you have in your account. But you also got to keep in mind too, though, with futures, man, or any type of derivative trading, there's the potential for a high loss, and you got to account for that, because if you're not able, if you're not, in a position to be able to accommodate that loss, you definitely don't want to be in that trade, because it's nothing like losing money that you don't have to wake you up to reality. Let me check something else out here. How many? Okay, still at 130. Sorry, I went up again. Let me get out of here. All right, so anyway, I just want to share that with you real quick. Man, and like I said, we got it as being, Canadian dollars being positive. It's going to be on the moves, going up. And man, gosh, probably what next? I'm trying to think. Tomorrow's Thursday. Maybe tomorrow what we do is we'll air that, and I'll show you the progress from that particular trading session, so that way you guys can get an idea. For you folks just tuning in, just share this with you real quick. Just give you a recap. This is some of the progress that we're making. We got 2 trades on at the moment. One of the trades is the Great Britain Pound, Australian dollar. That particular trade is negative 31 pips. So we're losing about $227.69 on that particular trade. Whatever. The next trade, which is the Great Britain Pound, Japanese yen, we're up 130 pips on that one. And that's positive $6,886 as of this taping right now. So that's really good. That's what we're happy about. We're still happy about the Japanese, not Japanese, but the Great Britain Pound, Australian dollar. And the reason why we're happy about that one as well is because it's still in play for us. And as you see right here, it's just kind of more so in consolidation mode. We'll be back in the profit zone once it crosses this little red line barrier right here, which we're, like I said, only about 30 pips off from that, which that's something that we can do probably within the next, hour or so. So anyway, just want to give you guys a recap of that before we get ready to get on to the next thing and get out of here. Let's see. Great Britain Pound came down. Oh, yeah, here we go. Great Britain Pound, New Zealand dollar. This is the one we were in the other day and got tapped out of so graciously. Man, this one just sucked because I had a really good position on in here, just like I had with the Great Britain Pound, Australian dollar. Get out of this one. And I was just like, and if you look at it, man, it's almost the exact same setup. Almost the exact same setup, man. It's like freaking amazing, right? Whereas, if you look at, so just kind of keep this in mind, right? Look, we had this strong move down, right? We had the exhaustion pullback where like, phew, right? Market took a breather, and then we had this consolidation over here off to the side, right? Before the market started to do what? Trend back into the original direction, right? It's going down. I went to the side. I was trending back down, right? But this pullback right here, right up in here, is what killed me, right? I wound up getting out. Yeah. See, look, exact same setup, man. Here goes the pull down. Here goes the market pull down. Here goes that exhaustion pullback. Right? Here goes the market. Right? Consolidating. And I almost got out around the same level where I got out with the New Zealand dollar, but just so happened that my stop loss was back a little bit farther than what it was. I think we would say like 16 pips. That was only the difference farther, right? Than the stop loss, than the top. And guess what? Price didn't hit it. Instead, it U-turned. It's coming down now, and we're close to getting back into that profit area, all right? And the ideal is that maybe within the next 24, we'll be back in the profit area, and then once we do, we'll just bring our stop loss down accordingly, and then just make this into a risk-free trade, ride it on down. And like I said, I think I'm going to move my take profit up a little bit too as well, and let this thing ride on down, make some money in this right here, get out, and look for the opportunity to get back into this one here, right? So I think this right here is going to be a really good opportunity, really good sell opportunity. And this is one I want to get back into. I want to deploy some capital over here, and I don't know if I'll be going all in, but I'll definitely be, leveraging this right here. This is definitely going to be a leverage trade on that one. Pound, New Zealand dollar. So, once again, this right here was one that we were in, and we definitely would have been making money right about now. We've been profitable. But whatever, we lost some money in it. The good thing is that we're making money elsewhere. But that's one of the things, and that's the reason why we trade with stop losses, just because you never know, right? Had I not traded with stop loss, right, and just kind of let this thing just go out there and free fall, it could have went massively wrong and went straight up and lost a ton of money. Now I know there's folks out there's traders that I've seen and that I've read about who don't use stop losses because they figure that, hey, you know what, I'm in the market, I did my analysis, and the market's going to move where it's supposed to move, and I'm going to be good to go. I just don't believe that, man. I don't believe in doing that, and don't recommend doing that. Use your stop losses, take your little small losses here and there, because the price is really going to move in the direction that you anticipate it's going to move into. You can afford to get out and get back in again, period. Right? And if you're using mental stops, or if you're just not putting stops in at all, you're just crazy, man. You accidentally get hurt. That's all. It's like, once again, it's like going out there on the freeway with a blindfold on and say you're going to cross traffic, right? You're looking to get hurt. If somebody's not really paying attention, they're going to whack you with the vehicle. Same thing is right here. At some point in time, you're not going to be paying attention. Price is going to jump. Something's going to happen. And you're going to get whacked pretty hard, right? And don't take losses. Why would you take a loss that you don't have to take? I ask myself that all the time. I ask people that all the time. Why would you take a loss you don't have to take, man? Conserve your capital, right? Conserve your capital. There's nothing wrong with taking losses, man. Take a loss like a man, or like a woman. You know what I'm saying? Take it, get on with your life, and keep going. That's all you gotta do, right? But this one looks pretty good. Would I get back into this one right now at the moment? Probably not right now. Yeah, let's do some analysis on this one. I don't know. I don't know if I necessarily see. An opening to get back in right now at the moment. Let's just see what we got here. Put some levels in place. See what we got. 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 I like this level here. Let's see what this means. All right, so yeah, so if we were gonna do anything, It looks like, this was the support area here, so it sold off from support. I'm sorry, support. Resistance area, so it sold off from resistance, which we were right to sell here, right, which is good. It's coming down to support, so if anything, I won't be looking to buy, I'll be looking to sell. The only crazy thing is, though, sometimes, price doesn't always go back to support. It could go from here and go back up, so, and you want to have your stop loss in place, so it gets a little bit trickier. Not saying that you can't do it, but it gets a little bit trickier when you're so far away from the original U-turn of the market, because that's kind of where you want to put your stop losses at the U-turns. And so when you get farther away from the U-turns and you try to put a stop loss in, it just usually means that your risk to reward is going to be a lot higher on the reverse side. So we'd be looking at, because I would want to put my stop loss there, right? That's 271 pips away, which is way too far away, and it's 196 to the support. So it's 271 pips away from, where you want to put your stop loss at, ideally, and it's 196 pips away from where you want to get your take profit. So, I wouldn't want to do that, because at $10, even just $10 a pip, it's $2,710 that you could potentially lose to get, 1,960. Is it worth it? I don't know. I don't know. Definitely, I don't know if it'd be worth it to me. I think it's definitely better setups, better trades that we could probably make, that could pay, potentially a lot more, better turnouts, better money than that. So that'd probably be one I wouldn't necessarily want to get into, But anyway, you get the idea though, right? How we kind of come in here and look at the markets and stuff, man. Definitely got to draw those support and resistance lines. And once again, I go back and I share with you the reason why we do that. As, and I know you heard me say it 1,000 times, but this is the 1,001th time. Whenever you go into the lobby of a building or a mall or someplace, usually you're greeted with this placard that's on the wall, and it says, "You are here," right? And so that just lets you know where you are in relation to the other businesses or establishments that's within inside that facility, right? The idea is to kind of give you a sense of, direction, where you're at and where you're trying to get to, where that is, and how far you need to go to get there. But when you come in and you place these support and resistance lines, it essentially does the same thing. It shows you where you are on the market in regards to, resistance, previous resistance or previous support. All right, and because those areas are acknowledged and respected by traders, right, over and over again, it's something that you need to be knowledgeable of, and so that way you can recognize it. Because when you get to these areas, right, price goes through this area of support, right, but it comes down to this next area of support. What is it? Does it recognize it? Buyers come in and push the price back up, right? Hits this area right here, resistance, that was a previous area of resistance before, right? And sellers come in and sell it off, right? Sellers come in and sell it off. Buyers come in, buy it up, right? At the support. The support, buyers come back in. Buyers come back in again. It goes up, goes down. Buyers comes back in again. All right, it goes through this area of resistance. It goes up, it comes back down. Buyers come back in. It goes up to this resistance again. It comes back down. Buyers comes back in. It goes back up, right? It comes down. It tries to go back up to this area of resistance again. Guess what? Sellers come back in and push it down, right? So this process just happens over and over and over again, right? And if you understand that, then you understand that when you get close to these levels, there are certain things that you should be looking to do, right? You shouldn't be looking to buy here, right? Even though you had a really good candlestick going up, this is not necessarily an area that you're looking to buy it because you're close to resistance, right? But if you didn't know that, if you just kind of looked at the chart like this, you might think, ooh, it's a good buying opportunity, right? You look and you say, okay, look, man, that's a good buying opportunity. You might even say, look, well, it was, this right here was resistance before, and now it's support right here, so it's a great buying opportunity. Let me just go ahead and buy in and ride this puppy on up. It's about to U-turn. It's about to, retrace, right? But if you didn't look at and know about the other, actual, support resistance lines in here, right? You might got fooled by the worst possible time, right? Only to see price move against you and to lose everything that you might have had invested at that time in that particular currency pair, right? So don't do that. Just take your time, put your lines in, determine where you're at in the market, right? And just kind of go from there, man. It's not rocket science. It's not hard. It just takes practice, okay? It takes a cool head, it takes discipline, right? One of the things that we offer is that if you like to have someone that can help mentor you with your trading, we definitely like to come in and help you, sit down with you, analyze, help you analyze what you're trading, where you're at, and then help you um, walk you through that whole process of making that decision. Now, we're not going to make the decision for you. We're not going to trade your account. Don't want to do that. What we do want to do is help you be a more decisive, more um, technical trader, right? So you're not trading off emotions, and that you're going to be able to come in and place better trades than what you've been before, based off of sound logic and not just emotions, right? And it takes time, and that's the benefit of having someone that can has been here, done that, to help you trade. And so if that's something that you're interested in, please give us send us a line, man. You contact us on our social media platforms. We're on YouTube, we're on Pinterest, we're on Twitter, we're on Instagram, we're on Facebook, or you can also hit us up at questions@forextechmagazine.com. Love to hear from each and every one of you. Also, too, if you guys are any type of trades that you have questions about and you want to get some more information on, please, please, please feel free to contact us. Love to sit down with you and go over your trades and just analyze it with you, see if we're coming up with the same conclusion that you're coming up with. All right? It could be that we are. It could be that you have something totally different. It's always it's always good to put two heads together, right, and see if you come to the same conclusion. If you don't, maybe something that I'm doing that you're doing different that might be able to benefit you, or vice versa, right? Let's see here. Excuse me. I think this is right here is pretty much it, man. This is pretty much we went through all the trades. I'm not looking to get into any trade today. If I did, however, get into a trade, it would definitely be to short this one right here. I don't think I would even do that, though, just until we finalize this candlestick, right? Figure out what's going to happen here. But this right here, definitely, I think, my play for the week. Keep an eye on it. Looks like it could be a potential to make some good money there. I still might actually get into this one here. I don't know. Let's see. At any rate, it's about that time for me to wind it down. I always like to leave you with something positive. So once again, I'm gonna give you back the Les Brown, because I think this plays really good into what we're talking about now, which is always shoot for the moon, and that way, if you miss, at least you'll be amongst the stars. You guys see me for the last 30 days. I've been sitting here trading live with you. Good, bad, and ugly. I've been sharing with you. Haven't been hiding my account. Have not been hiding my trades. Been letting you guys see what we've been doing in real time. Been very upfront, very transparent. And the reason being is so that way you guys can see, what it's like to trade. You guys can see, some of the challenges that occur when you trade, right? But you also see the fact that we've been shooting for the moon a lot with these trades, right? Very disciplined, very methodical, and just kind of take our time going through it. Well, I think we're actually going to be landing on the moon here shortly with this last couple of trades, and that's why we're going to go over into the actual live account, because I think that we showed you enough on the demo account to demonstrate that we're confident enough to be able to trade on a live account. And hopefully you follow us as we trade on a live account, and hopefully you're making money as you follow along with us, right? And if you're not making money, if you're not where you want to be at in your trading, I encourage you to please reach out to us. Like I said, we have mentoring programs that's available, and the whole idea behind our mentoring program is not that you pay us a bunch of cash up front, and then we teach you what we know, whatever, mentor you. No, the whole idea is that we have a vested interest in you. So the way we like to run our mentoring program is that as you make money, that's as we get paid. You know, I mean, there is a little bit of upfront cost associated with it because that's just so that when you got skin in the game, and that we're making sure that you're actually serious about it. Because at the end of the day, the more time that I take away or someone else takes away to try to help you with trading, that's time that we could be used towards trading ourselves or with our family or doing something that we like to do. So if we're gonna take time out of our day to kind of help you with what you want, then in all fairness, need to be compensated accordingly, and at least have some type of initial skin in the game, so that way that everybody, both parties, understand that you're serious about trading, serious about learning this, and it's something that you really want to do, right? And then kind of moving forward, excuse me, as you're able to kind of go in there and pull money from the market, the thought process and the hope is that as you're making money, that the money that you're making in the market is going towards help paying for your mentorship. So you shouldn't be having to work 2 or 3 jobs to help pay for your mentorship, the money that you're making from the market. Because if we're doing what we're supposed to be doing on our end, and you're doing what you're supposed to be doing on your end, you should be getting profitable, right? And if you're not profitable, then we need to figure out where the fault lies at. Is it something we're doing, something we're not doing, or something you're not doing, right? Um, but yeah, like I said before, the goal is though to have the money from the business of the trading help you pay for the expense of the mentorship. Okay, not something where you got to go out and work an extra job or take money out of your family's account to pay for the mentorship because it's been a year in and you haven't made any money, or it's been 6 months in and you haven't made any money. No, we're not looking to do that. We're looking to try to help you start making money as soon as possible. Of course, there is an initial learning curve that everyone has to go through. Make sure that once you get through that and you're able to understand what's going on, you got the basics down pat, there's no reason why you shouldn't be able to go in there and start being profitable. At any rate, listen, guys, I'm going to get out of here. That's it for me for today. I thank you for spending your part of your morning with me. I've enjoyed it. Hopefully you have as well. And hopefully you got something out of it. Look back tune back in tomorrow with us. Look forward to seeing you. Hopefully you make a ton of money today. God bless you. Take care of yourself. Be safe. And I will see you tomorrow.